The top business stories live from the Sky News City studio. London Stock Exchange Group says it's optimistic of a revival in stock market listings following a disappointing 2023. IAG, the parent company of British Airways, reports record earnings as the air travel industry continues to recover. Plus, the chief executive of Trainline on 25 years of online rail ticket sales. Good afternoon, this is Business Live with me, Ian King. LSEG, the parent of the London Stock Exchange, said today it was optimistic of revival in stock market listings this year after a disappointing 2023. LSEG, which owns the financial information provider Refinitiv and now which achieves 70% of its revenues from data and analytical services, was reporting an adjusted operating profit of £2.9 billion for 2023. That was up 4.9% on 2022. I've been speaking with David Schwimmer, the chief executive, and began by asking what had driven sales growth during the year.
We have seen good growth across the business. The price rise is about the same price rise we took last year, and we've seen really good retention, and then we've seen also great new sales. So it's some of each of those.
I was very interested to see what you had to say about Refinitiv. Obviously, you've hit all your targets from the time of the acquisition, but there was a slide in the presentation where you talk about how you're winning back customers who'd left the business. It feels as though you're competing as much on product and service as you are on price.
If anything, I would say customer service, critical, great product is critical. So we have some very sophisticated customers out there, and they're looking for all of those things. They're cost conscious as they're looking to drive their own efficiencies, but they also want world-class product. They need great data for their businesses. And given the kind of business we are, given what we serve, what we provide, they need our data, they need our services to be of the highest quality so that they can serve their customers.
Now, you've revealed today that the first products arising from your partnership with Microsoft are going to hit the market in the next few months. What sort of things can customers look forward to?
Well, let me give you an example of one of the products that we are going to be rolling out over the next couple months. It will be a pilot version of this will be in our customers' hands really over the next month or two. It's called Meeting Prep. It is basically a tool that allows you to create a briefing memo for a meeting in about 15 seconds that takes data from us, so public company data, news, analytics, research, and combines it with the user's information about that particular company or meeting from emails, from a CRM system, from other files using generative AI. So really powerful, a lot of efficiency. It's the kind of thing that can create a high-quality briefing memo in maybe 15 seconds instead of an hour or two.
Obviously, when people talk about generative AI, they talk about ease of use. Is the aim here to put more information in customers' hands in as user-friendly a way as possible?
That's certainly one of the aims. It's also to give our customers the ability to generate insight and efficient use of information from, in many cases, very large amounts of data that they're trying to work their way through. And that's one of the powers of this technology. We have an enormous amount of data within LSEG, really unmatched breadth and depth. And to use this kind of technology to bring insights, efficient communications to a customer's fingertips, really in the course of seconds as opposed to hours, that's one of the elements here that's particularly attractive.
Now, looking at the individual business lines, post-trade grew most rapidly. Was that just because it was flattered by the acquisition that you did this year, or was there more to it than that?
So great performance from post-trade, up 17% year over year. If you take out the acquisition, it was still up 12%. So a terrific performance. And a lot of that was attributable to SwapClear, which is where we clear interest rate swaps. We are the leading clearinghouse on a global basis for interest rate swaps, which are the #1 cleared derivative. And we saw activity in that space related to the uncertainty about interest rate movements, the uncertainty about inflation. A key point about this business is that it is not dependent on rates moving up or down, but we do tend to see incremental volume when there is uncertainty and when there is volatility. And so that business has been growing very well for years, and it has had a very strong performance in 2023, and we don't think we've seen the end of that.
Now, a lot of interest in what you've said today about the IPO pipeline. You're obviously reasonably confident there. There's been a lot of speculation about Shein listed in London. Is there anything that you can say on that today?
Nothing I can say on any particular listing. I would say that we are seeing more companies spending more time in terms of preparation for IPOs than we've seen in a number of years. So I mentioned earlier, encouraging pipeline for IPOs in this market. The last couple of years obviously have not been particularly healthy for IPOs either in London or around the world. So I think it would be great to see a better pipeline coming through.
Do you feel that the doom and gloom then about London and New York is being overdone in this side of the Atlantic?
I think that we continue to be the leading international financial center. We continue to be by far the leading exchange in Europe. And I think we'll see as this pipeline plays through an interesting new cohort of public companies in London.
The stock exchange is now only 3% of your business. You're predominantly a data and analytics business. Do you get fed up at the disproportionate amount of attention paid to it within the business?
We understand how important the London Stock Exchange is to London from a brand perspective, from the broader financial ecosystem, and it's a really important part of our business as well. It's core to our strategy. When we talk about the strategy of LSEG, it's about serving our customers across asset classes on a global basis and across the trade life cycle. And that means pre-trade, trade, and post-trade. And to have the leading exchange and capital raising venue in Europe and one of the leading equity exchanges in the world as part of our business, it's really important to us. There's also I'll call it a virtuous circle in our business, because as we have more trading on the stock exchange, that creates data, pricing data and other data, which we then distribute to our customers. They then use that data to do more trading. So that's a core part of our business as well in terms of that virtuous cycle of trading activity leading to data, leading to trading activity.
That's David Schwimmer from LSEG speaking to me earlier. Now the 11th biggest company on the London stock market. Other news for you now. The parent of British Airways and Aer Lingus has reported record earnings on the back of the continued recovery in air travel. International Airlines Group, which also owns the carriers Vueling and Iberia, said operating profits came in at €3.5 billion in 2023. That was almost double the €1.3 billion achieved in 2022 and was also ahead of the €3.3 billion made in 2019, the last full year before the pandemic struck, despite it flying at just 96% of 2019 capacity. Well, Luis Gallego, the chief executive, said demand continues to be strong, with bookings for the first half of this year already 62% booked and ahead of the position this time last year. He said IAG aimed to grow capacity by 7% this year, with BA this year overtaking its 2019 capacity. The consumer healthcare group behind Sensodyne toothpaste, Centrum vitamins and Panadol pain relief said today it expects to grow sales this year despite what it called a challenging operating environment. Haleon, whose other brands include Tums antacids and Otrivin nasal drops, was reporting an adjusted operating profit of £2.5 billion for 2023, up 10% on 2022. The company, which last month sold its chapstick brand, highlighted a strong cold and flu season at the beginning of the year and a big rise in sales in China following the end of all COVID lockdowns. The rate of inflation in the United States last month was up 0.3% on December. That was in line with Wall Street expectations. On a year-on-year basis, inflation was up 2.4%, which represented the smallest annual increase in inflation in 3 years. Sainsbury's will cut around 1,500 jobs as part of a £1 billion cost reduction plan announced 3 weeks ago. Roles affected include a contact centre in Widnes, Cheshire, where most staff will see their employment move to a different company. Jobs will also be going at the supermarkets, in-store bakeries and at some fulfilment centres. Sainsbury's, which employs 162,000 people nationally, said affected colleagues would be offered alternative roles where possible. And the Chancellor has announced that Claire Lombardelli will be the next Deputy Governor for Monetary Policy at the Bank of England. The appointment will lead to speculation that she's being lined up to become the bank's first woman governor. Ms Lombardelli, who succeeds Ben Broadbent, is currently Chief Economist of the OECD, but before that was Chief Economic Advisor to the Treasury and Joint Head of the Government Economic Service. She began her career at the Bank of England and has also worked at the International Monetary Fund. The appointment means that there are now more women than men on the bank's rate-setting Monetary Policy Committee. Now, the food giant behind household names like Birdseye, Aunt Bessie's and Goodfellas has enjoyed another year of record sales, despite seeing a decline in volumes, the amount of food that it sells. Nomad Foods, which also owns the Findus brand in a couple of countries, saw sales rise by 3.6% to €3 billion in 2023, as price increases more than made up for lower volumes. Underlying operating profits rose by 2% to €535 million. Well, joining me now is Stéfan Descheemaeker. He's Chief Executive of Nomad Foods. Stéfan, afternoon to you. Did you raise prices across the board, or were there some categories where you raised more than others?
Good afternoon, Ian. Actually, it's been an interesting year this year because we've seen different categories growing very fast in terms of price, and some others were more subdued. So we've decided to really be very transparent with our customers, and where obviously there is a cost of living increase, we've been forced to go that way, and some others obviously we've been more stable. So that's the way we've been doing, and actually think we've been able to do this, while respecting the consumers, the customers, and at the same time, it's been 8 years in a row of increasing sales, increasing profit, something we are quite proud of.
You mentioned in November last year that negotiations were quite tough with one or two of the supermarket multiples. Has the decline in volumes reflected the fact that you've been delisted anywhere around Europe?
Well, in these kind of situations where ingredients and let's say raw material, energy are growing very, very fast, it's unavoidable that you have some healthy, racy conversation with some people, and sometimes it takes a bit of time to find an agreement. And yes, we had a bit of disruption, but that's normal. And most of the time, we have been able to resolve the situation. And right now, we are really back to square one, which is fine.
Obviously, your margin was high, which suggests that customers are perfectly happy in some cases to absorb these price increases. I mean, is that down to inflation or greater operational efficiency?
Well, it's really, the efficiency has never been as good as we had in the past, and we're still raising the game, which is absolutely necessary. Because if you want to reinvest in the business in terms of advertising, in terms of innovation, you have to do this. We are the frozen food leader in Europe, not only in the UK, but across Europe. And that's our job. And so that's why we need to be more efficient. And by being more efficient, we're going to be able to invest sometimes in price, sometimes in innovation, sometimes in advertising.
Are you optimistic that you can return to volume growth this year?
Absolutely. Absolutely, very clear. We've seen, the result. We started really to reinvest in advertising in a very significant way at the end of the third quarter. We're starting to see the results in the final part of the year. So we're really seeing the difference between October, November, and December, and then in January the same thing. So we've mentioned that today that we should increase volume starting in the second part of the year.
And if you look out over the last 12 months, which are the brands that you've been happiest with and which have perhaps been more problematic?
Well, overall, our brands have done extremely well. For example, we're very, very pleased with our latest acquisitions 2 years ago in Serbia, in Croatia, with brands that you're probably not aware of, which are called Ledo and Fricom. They're doing extremely well. But overall, the brands are doing extremely well. Some categories are more difficult than others, between fish, poultry, or vegetables. But overall, the brands are doing well.
I mean, anecdotally, there's been a lot of talk about consumers switching to supermarket-owned labels during the year. Have you seen that in certain categories rather than others, or in certain countries more than others?
Well, the good news is with frozen food is it's a category that is extremely affordable. It's one of the beauties of frozen food, excluding obviously things like sustainability. It's also a great category in terms of taste in healthy food. But basically, the category as such is doing better than, for example, chilled or fresh. That's one thing. But within this, and it's normal, during the cost of living crisis, which is really, we're starting to see the end, most of the time, and it's not the first time, private label are doing better. And then it's our job as let's say, brand leader to reinvest in the business, to come with new products, to obviously offer something new, and then obviously things are starting to be back on track, which is exactly what we're doing right now.
Now, Stéfan, immediately next to you is a photograph of a very distinguished-looking man. You better explain to the uninitiated who that is.
Absolutely. It's Clarence Birdseye. Clarence Birdseye is a genius. He's the one who invented frozen food 100 years ago. And we're very proud of having been, let's say, the descendants of Clarence. One of the things, I think he would have been very proud of us is, as an inventor, is all over the years, there was some sort of mantra that frozen food should be kept at minus 18 degrees. And we are challenging this. We're checking with independent, let's say, consultants in the UK, and we think we can go to minus 15. And we may say it's nothing. Well, it's everything, because by doing so, you're probably going to save 10% of energy. You're going to be able to, again, back to the consumers, we're going to be able to pass this, to the consumers ultimately. And on top of that, it's great for the planet, because the carbon footprint is improving. So that's one of the things we're doing, and I'm pretty sure that Clarence would have loved this.
I'm sure he would. Nice bit of innovation to talk about at the end there. Stéfan, really appreciate you joining me today. Thank you.
Thank you very much, Ian.
Bit of breaking news to bring you. The Home Office has just published the final reports by the former Borders and Immigration watchdog David Neil. Mr Neil was sacked by the Home Secretary earlier this month, who accused him of breaking the terms of his appointment. Our political correspondent, Gurpreet Narwan, is with me. Gurpreet, what's in these reports?
Well, they've just been published, Ian, so we're still going through them. But a couple of headlines already have emerged. Firstly, one of the things that this report points out is a claim that the Home Office wasn't providing sufficient guidance to providers, so things like hotel managers for migrant hotel managers, about when DBS checks should be renewed for unaccompanied minors. He also called for firmer commitments on the timescales for deciding asylum cases. At present, the Home Office aims to complete them within 6 months, but he called for a firmer timescales on those service standards. Now, these reports, they form part of a row between the Home Office and David Neil. He was sacked last week by the Home Office. James Cleverly is said to have lost confidence in him after he was said to have breached the terms of his employment contract after providing data to the Daily Mail newspaper, which purported to show that UK Border Force was failing to check passengers arriving on private jets through City Airport. He called that a scandal, saying it meant that criminals could be arriving to the UK. The government denied those allegations. He was swiftly sacked. But as part of this, it became clear that Neil was a bit of a thorn in the side of the government during his tenure. He had repeatedly raised concerns that the department was too slow to publish his reports, and opposition parties, including Labour and the Lib Dems, were quick to seize on that, accusing the government of a lack of transparency. And there were 15 outstanding reports. Today, they have published 13 of them on subjects including asylum accommodation, Afghan resettlement scheme, asylum casework and e-passport gates. 2 further reports are still due to be published on airport security and visas. As I said, we're going through them now, and we'll bring you any news that comes from that shortly.
Gurpreet. Well, European stocks have finished the month on a largely positive note on a very busy day for... Well, I say that. Obviously, the closing auctions have been a bit wishy-washy there. Only the DAX are the main indices in Europe finishing to the upside. Now, among talking points this afternoon, Poste Italiane is up 2.5% in Milan. That's after the Italian Post Lopper raised its dividend by more than expected. Well, here in London, the FTSE 100 has... here it comes, any second now. Talk among yourselves for a moment. There it is. FTSE 100, well, it's more or less flat. I think that is just about enough to seal a third monthly gain in 4 for the FTSE. Again, it's a very busy day for results. The leading blue chip gainer in percentage terms is Howdens Joinery, the UK's biggest kitchen supplier. That's finished up 7.5% on a confident trading update, while Haleon, which also reported today, mentioned them a little earlier, they finished up 6%. To the downside, the mining equipment group Weir Group has finished off just over 2.25% lower on its results. Outside the FTSE, again, a very, very busy day for company results. The energy services group Hunting has finished up 11.5% on better than expected results, while the renewables generator Drax Group also up nearly 11.25%. That was after a big rise in the dividend. Meanwhile, the hedge fund manager Man Group has finished up nearly 1% higher, again, after some very solid results indeed. Meanwhile, the logistics group Wincanton, that's ahead 22% after US rival GXO, that's the owner of the UK's Clipper Logistics, of course, launched a £760 million takeover bid, which trumped French bidder CMA-CGM. Very interesting ongoing bid battle, that one. Over on Wall Street, news of the smallest annual increase in inflation in nearly 3 years has sent equity slightly higher this afternoon. Talking points include the retailer Best Buy. That's reported better than expected quarterly sales. To the downside, the cloud data storage group Snowflake has fallen by 18% after its sales missed forecasts, and the long-standing chief executive unexpectedly announced his departure. Over on the foreign exchange markets, well, the US inflation figures have sent the dollar slightly higher right now. Sterling off nearly a fifth of 1% against the greenback. Sterling very slightly up against the euro. Single currency off a quarter of 1% likewise against the dollar. Meanwhile, the oil price, well, that was in negative territory for most of the day. It's just about perked up on the inflation figures, which have left the prospect of a June interest rate cut on the table. A barrel of Brent crude will currently set you back $83.71 a barrel. More or less unchanged on the session right now, has to be said. Now, no one could say Jody Ford opted for an easy life when he became chief executive of Trainline in September 2020. The pandemic had crushed rail travel and pushed Trainline to a £107 million loss that year. Soon afterwards, the UK government announced plans for a state-backed rail booking app, I'll get my words right, hammering the share price. Those plans were shelved, and this week, Trainline celebrated its 25th anniversary of online retailing. And I'm pleased to say Jody Ford is with me now. Jody, welcome to you. Did you wonder during that sort of period, late 2021, whether the business would be around to mark this anniversary?
Not at all. Thanks for having me on. I always believed that rail travel is a really key part of kind of the broader sustainability agenda, and people love rail. I grew up with rail, and I totally believed it would come back. But to your point, 25 years ago, we sold our first ticket. Over that 25 years, Trainline's kind of invented and brought out barcodes and got people using them, making it easy. We've invested a lot in the mobile app. And then more recently, actually, over the last 3 years, really gone to Europe in a big way. So Italy, Spain, France, to the point now where we're actually the largest mobile rail app in Europe, which is hugely exciting, as well as adding kind of features like Split Save, which I'm sure customers in the UK use, which allows them to find the best value. And that's kind of what we do.
Yeah, I mean, how soon before international becomes the biggest part of the business? At the moment, it's predominantly UK, isn't it?
Well, what I'm pleased to say is the UK continues to grow because customers in the UK continue to find it easy to book their tickets online with us and to be able to find out and to not just book their tickets, but to support their journey. The great news is, in addition to that, that in Spain, for example, we're seeing a real liberalisation agenda in rail. So if I'm in Madrid, there's actually 4 different trains I can get on to go to Barcelona. And that's great for customers. It's driving down prices, it's driving up volumes, getting people off road, out of air. And that gives a role for Trainline to help customers find the right train service to go on. And what we see in Spain is now happening in Italy and in time, we think, in France.
What proportion of UK rail tickets are now sold to you, as opposed to people buying direct from train operators like GWR?
So we sell kind of around, let's say, 2/3 of the online tickets, and actually online is now by far the largest part of the ticket sale market. And I think what people find is they find the value, they can book ahead, and they actually trust us to be on their side to find the right ticket, help them with rail cards and things like that.
Now, you regard yourself very much as a tech business rather than a transport business. What sort of stock market listed peers do you benchmark yourself against?
So we look at a number of different players. I mean, at one end, we see ourselves as a mobility player and look at some of the big US stocks that are looking at mobility as well as travel. And then here in the UK, we'd be looking at players like Auto Trader or Rightmove and those other UK tech businesses. And I think what we're super proud of is that we are a British tech stock. We have about over 1,000 people based here in London and in Edinburgh, as well as now employing people throughout Europe to build out what we think is, well, what is the best European rail app.
Uber launched a rail ticketing service last year. Have you had any impact from that?
Well, I think the interesting thing as you look back over this 25 years is that there's been a number of players who have launched competing services, whether they be UK players or West Coast players. And what I would say is people keep coming back to me. What people are telling me is, we just love your rail app. We have hundreds of engineers and data scientists who are invested in making the very best app we can. And we back ourselves to continue to innovate ahead of all the other players.
It's a tight labour market. Do you have difficulty recruiting?
We find actually the generation today are really engaged in our broader purpose, and this is about being able to say we're part of the solution, getting people out of the cars and off air, and that really connects. And actually, we're getting some amazing hires, some of them from West Coast tech companies who've left, and just more broadly, there's a great ecosystem in London of great people we want to hire.
There absolutely is. Do you have to be a train buff to work for Trainline?
You don't. I mean, we're really a tech company applied who love rail.
All right, Jody, great to see you. Here's to the next 25 years. Thanks
Thank
for
you very
joining
much.
me. That's it from me. I'm back at 11:30 tomorrow with the next edition of Business Live. Hope very much to see you then. In the meantime, do stay tuned. Coming up after this short break, it's Simon Mosin with the News Hour. Thanks very much for joining me today. See you tomorrow. Thanks for joining me. Cheers.